it going, guys? Sunnykhan with First Name Real Estate. I'm making a video today about mortgages and some interesting insight about it, about how to get qualified and the documents you might need to get qualified, and explain a couple of terms which are commonly known as PITI and PMI. Those are some terms that you've probably heard in the past and you wondered, hey, what does that mean? What is PITI? What is PMI? What are all these terms that thrown at me? I'm going to explain them in this video, so just hold tight. So if you're trying to buy a home right now, or in the future, or whenever, these are the documents that you're going to need to get qualified for a home loan. Everyone knows you got to have good credit, and you got to show that you can afford a payment on a home that you're trying to purchase, right? But here are some of the documents. It's a little list. If you guys want, I could email you guys a list of the documents that you need to qualify. Just contact me, email, phone call, text, however you guys like to do it. Give me a holler and I'll send you a copy. But I'm gonna start reading them all for you guys right now. First form you're gonna need is W-2 forms from the previous 2 years. If you collect a paycheck. So if you collect a paycheck, you need W-2 forms for the last 2 years. So pretty much your last 2 years tax returns. If you own a business, you need a profit and loss statement and 1099 forms. So if you own a business, guys, so 1099 forms and profit and loss statement. Number 3, once again, if you work or even if you own a business, you should be on a payroll. Recent paycheck stubs. Number 4, most recent federal tax returns and possibly the last 2-year tax return. But I mentioned that in the first question, but let's revisit that real quick. Most recent federal tax returns or possibly last 2 years of tax returns. So every bank's a little different when it comes down to qualifying you for a loan. Some may ask for 2 years, some may ask for more, some may ask for less. It all depends on that bank. A complete list of your debt such as credit cards, student loans, car loans, child support payments, along with minimum monthly payments and balances. So they want to see all of that. Right? A list of assets including bank statements, mutual fund statements, real estate if you own any, and automobile titles, broker statements, and records of other investments or assets. So if you have other investments or assets out there cooking up somewhere, they want to see that. Okay. And last, canceled check for your rent or mortgage payments. So you get them a copy of a canceled check, and that's pretty much the last document that they might need, depending on that bank. So let's get into the big PITI. What is PITI? Take a sip of my tea real quick. I just want to let you guys know that it is currently, what time is it right now? It's 12 a.m. and I'm making this video. So a cup of tea is going to keep me going. I'm making this video for you guys, so refer to it if you're trying to get a loan. So what is PITI? Right? PI, principal and interest. So the principal loan amount and the interest. And TI. What's TI? Right? PI is principal and interest. TI. What's the last TI? So you're looking at property taxes and homeowner insurance. Principal, interest, property taxes, home insurance. PITI. Right? So that's what they're referring to when they say PITI or PITI or however they may say it. Your principal, interest, property tax, and home insurance. So that gets all calculated into your monthly payment. So for example, if your monthly payment is, let's say, $1,379, so $1,379. Your principal and interest is going to be $979. Your property taxes, let's say $250. Your homeowner insurance, $67. So they calculate all that, and then they calculate the PMI, which would be $83, and you get the grand total amount of $1,379. So $1,379 would be your monthly payment. So what's PMI? I just mentioned it, right? $83 for PMI every month. What is that? So PMI is when you pretty much put less than 20% down when you're purchasing a home. You got to purchase private mortgage insurance. So this is just for the lender's security. You put less than 20% down, so they're gonna request you. I mean, thing most banks do is they request you to purchase PMI. It protects the lender in case you don't make your mortgage payments. If you miss a couple, or you're late and so forth, it's insurance on that. So they repossess your house and have to sell it for less of the amount that is left on the loan. But if you have PMI, it'll save them from doing that. If you have private mortgage insurance, so if you don't have private mortgage insurance and you're missing your payments on your mortgage and you get foreclosed on, they might have to sell the house for less than what's owed on it. So that's a loss for them. But with PMI, they're protected in that case. So if you get less than 20%, if you put 5% down, you might have to you might have to purchase a PMI on your loan. So that gets calculated into your money. So if you guys want to know more about mortgages and how they work, and if you guys want me to make another video, I'll go ahead and do that maybe in the next couple of weeks or a month or so. But if you guys have more questions, contact me. I have lenders that can answer your questions, to the T. So whatever question you have, they can answer. I'm sure of it. I stand by them. They are great. I try to answer your questions as best as I can to my knowledge. I do know a lot about loans, but sometimes, it gets a little tricky, and we have to go to the professional loan officer or loan consultant, right? So yeah, once again, Sunnykhan with First Team Real Estate. This video is on mortgages, and I will make another one soon. And I hope that this is beneficial to you guys. And if you have any more questions, feel free to contact me. Thanks, guys.